As SaaS companies plan their next phase of growth in the post-COVID era and start looking at global expansion, they are faced with a whole set of new challenges. Do they have a product market fit? Have they taken a strategic view about these markets? What is the mindset change required? Do they have the sales firepower to make it happen? And how has COVID-19 changed the opportunity for global expansion? In today's Future of Sales series, we will unravel the mysteries behind driving success in global expansion for SaaS companies. My name is Thomas Abraham, and I'm an advisor to SaaS companies, helping them with their business strategy, go-to-market, and global expansion. And I'm pleased to have with me today, all the way from London, Christopher Rochard. Chris is the Chief Innovation and Marketing Officer at WGP Global. Chris and his team at WGP have expanded several SaaS and tech companies into the UK and Europe. So Chris, welcome to the conversation today.
Thank you.
Yeah.
Good to be talking to you.
Yeah, so great, Chris. So Chris, let me just set up a scenario for you. Now, we have a SaaS company in India, which is, in the region of about $5 million. And they have the potential to be a, global player if they play their cards right. They have over 200 customers, enterprise customers in India, and are now seeking to expand into markets like the US, UK, and Europe. And obviously, if they've got their product market fit and their strategy right, they could these markets could be really attractive to them from the perspective of the fact that adoption could be good, and obviously the margins also could be great. So Chris, in your view, what do you think are some of the critical success factors for a company of this kind to really be entering the UK market?
I think first of all that they, you touched on strategy there, but I think that the plan, there needs to be a specific plan in regards to where they're going to land, and whether that's the UK or mainland Europe. I think they need to be very, very clear right at the beginning of who their customer is in that market and where they actually are. I think that the other point to put there is that they need to have local help to set up a landing zone for them, to set up some early relationships for them that they can go in and understand, get a deeper understanding of the market. And I think that is critical. I think the other critical point is actually, and we're obviously moving into this world now where salespeople are extremely important, more so than they've ever been. Everyone always thought they could handle the sales process online or, through a call center and things like that. I think going forward, there's going to be a much bigger requirement on companies to actually have, proper, well-informed, well-educated salespeople on the ground that can actually go and integrate, throughout the sales pipeline with your customers. And I think now more than ever, what I'm seeing here in the UK and conversations that I'm having in Europe, that the recruitment drive within SaaS companies, especially, is to engage with good and recruit, good sales talent.
Right. Okay. Yeah. So Chris, also, some of the things that one reads about and based on discussions with people, is that it also seems very important for perhaps the founder and some key people to relocate and base themselves out of the UK or mainland Europe, wherever they're wanting to, if that's really the market for them to, which they're seeking to penetrate. So that's one aspect. The other thing is that, I think also to enter an international market, there is adequate capital that's required, so I think capital is the other big challenge that people have. And also, is this going to be, like a more of a UK strategy, or it should be a pan-Europe strategy? I mean, how do you see it actually panning out?
Well, I think that depending on where the UK, depending what sector they're in as part of the SaaS category, I think depends on where they land in the UK. So, for instance, if your SaaS platform is within the manufacturing sector, for instance, then there'll be certain parts of the Midlands probably in the UK that you would want to be close to your customers. But for HR tech, which I know is very close to your heart, Thomas,
Yeah.
London would be, the appropriate landing zone for that. One thing, London, now you've touched on founders coming in to the UK. UK has a very aggressive, investment programs for visas, etc. It has very, deep ecosystems for supporting early stage businesses, but also businesses that are expanding and relocating into UK. The government assistance programs, funding, etc., are very, very good. But what London allows you, especially, it's an international city.
Right.
So the linkages between, other European cities is deep and mature. And also going into North America, Canada, other Commonwealth countries, the US, all of those actors are in London at the moment. So it does give you it's a global ecosystem within London. I can't really impress upon entrepreneurs, founders enough. Just generally, if they came into London, just the depth and breadth of what they're going to find in, their available, the access to clients, customers, etc. But you are right, and you've touched on that. I think one of one of the things that we probably should add into this is that capital is important, and that expansion capital, growth capital is important. You're not going to be able to expand into markets with I've had experience of people walking, trying to expand into UK, Europe, elsewhere with either no capital or very little capital, and trying to work on commissions, royalties, and things like that. That is a recipe for being unsuccessful. But I think one of the big things, and we probably should have touched on that on the part of it, is that the expanding into these markets is that the vision, the value proposition, and actually how that transmits through your whole business is so important. People want to hear a compelling story about how you started, the origin story, we call it here, and how, what they're looking to do, what is their vision for, being in the UK, being in Europe, and, global expansion is absolutely critical. And people are going to want to hear that each and every time they speak to a customer, a prospective customer, a partner. Yeah. That's absolutely key.
Yeah. So Chris, how does this change, or how does this get modified if we're talking about a very early stage pre-revenue company, wanting to enter the UK, but they have something which is quite disruptive, and obviously they have limited capital. So is there a recipe that we can provide for a company of that profile as well?
Well, you don't need me to tell you this, and we've had long conversations about this in the past. I think that one of the commonalities that pretty much every country, there are a few exceptions, South Korea being one of those, Holland that we've done a lot of work in being another, where the access to that early stage capital is very liquid. And there's a lot of investors, big investor pool, people are looking to get in to companies at that stage. Places like London, Paris, Frankfurt, etc. They are harder, projects to work on, harder projects to get traction on. What I would say is that the UK, especially now, on R&D, tax credits, etc., that early stage capital is very, very aggressive. They want companies that are innovating, that are spending time, money on research and development,
right?
And there is the ability to cascade into the UK R&D costs that you've incurred outside of the UK. And there are specialist people that we work with businesses of all sizes, helping them navigate that particular terrain. But it's a very generous R&D environment in the UK now. So that is, you know, one angle to it. I think the other angle to it is that, you know, angel, venture capital, all of the major funds, all of the funds that, if you are truly disruptive, are here, so you get access to them. One thing I would caveat that with, and just in my experience, my humble opinion, that if you're trying to do that as an Indian corporate entity, come into the UK and trying to trade through the Indian corporate entity, that is very tricky. So if they are going to come in, and any company of any size would need to set up a local corporate structure. That's not just, you know, obviously for some counterparty reasons, but also for banking, merchant services, etc. You would need to have that local. You'd have that local co in place. But, you know, in regards to corporation tax rates now in the UK, you know, they're competitive, and I think with, and I hate to say it, but I'm going to say it, Brexit, there's going to be, you know, a more competitive environment now with our taxation rate. So it's a good time for businesses of all stages, whether they're turning over 5 million as a SaaS platform or they're pre-revenue, to say, listen, can I get traction in the Indian market? Maybe they can, maybe they can't. If they can't, then the UK, for a number of reasons, culturally, you know, historically, you know, welcomes, you know, disruptive research and development rich businesses.
Yeah, sure. Okay, so so Chris, now moving on, you know, to something more practical. You know, can you sort of you know, really outline any success story that WGP has scripted for a company, a SaaS or a tech company, you know, entering the UK or Europe?
Yeah, certainly. So we as you say, it's evident from our website that predominantly over the last 5 years, especially, that we have been very tech focused. And pretty much all of our success stories have been in that frontier technology space, mainly AI. We've had a lot of, there's a lot of interest, excitement and capital that follows that into those sectors. But, you know, SaaS itself, you know, is, you know, the efficiency, I think now is what investors are looking like. You know, before this crisis we've had, there were two main areas that, you know, that the world was suffering from. One was, you know, obviously workforce inefficiency, and the UK has a problem with productivity. So, you know, I think SaaS generally will be an area where investment will go into those types of efficiency software technologies. So we've always followed that. You know, we're always very, very, you know, we have deep dialogue with investment groups, private equity funds, family office, venture capital funds, angels, etc., trying to get a true picture of what's going on in the market. But we've worked, as I say, on AI technologies, and we've had, you know, they've come in from different parts. We re-domiciled one that came in from the United States, couldn't get any traction in the US at all, too early stage, no credibility, you know, just no visibility at all. If you looked at them, they were anemic on, you know, social media, Google, etc. Just couldn't get any traction in the US market. We brought them into the UK, set them in an efficient structure in the UK, protected their intellectual property, which is absolutely key, set them up some early stage partnerships and linkages into the local ecosystem. And then they subsequently went on to raise, you know, quite significant capital. They're now on their B round. So, and they're looking to, you know, there's already talk within that business over the last, that's 3 years ago. We set that up in the UK. They're already talking about a reasonably early stage listing to access further capital for, you know, further project requirements that they have. Right. So, you know, we continue to do it, but I think that and I go back to this, what we said earlier, that the absolute critical thing with all the success cases we've always had is there's always been a leader, a founder that has a story to tell. And I think that is, you know, looking back over my entire career, and I think the rest of my partners would say the same, that, you know, financial fundamentals, looking at a profit and loss, looking at a balance sheet, yeah, that's great.
Yeah.
But the thing that really, our critical success factor, and I think you touched on that term right at the beginning of the call, that deep immersive story about their, how they started, what their vision is, I think is absolutely a critical factor.
Yeah, no, I think that's great insights, and I think anyone who watches this episode would certainly, get a lot of clarity in terms of what it takes to drive success, as far as an entry strategy into the UK is concerned. So moving on to another, area which is really up for debate is that, a lot of companies feel that, when they want to expand globally, their preferred destination is the US. They see the US as a large market, great opportunity, and so I need so my question really to you is that why would you advocate UK as perhaps a good option or a better option than the US? I mean, any specific thoughts around that?
Listen, I love the US dearly. I've got continued to have deep, long-standing business relationships in the United States. I spend a lot of my time during the week speaking to friends and colleagues and partners in the US. The US is, as you say, it's a huge market, and it's a very proper market. Is my interactions with it, but equally it's a hard market to penetrate. And I think that for certain companies coming out of India, it absolutely makes total sense to hit the US, and whether that's East Coast, West Coast, or whatever category they're in, size, that makes perfect sense. But I wouldn't say that's a one size that fits all. I think that you need to look, where are your customers, where is your market outside India, and how do I get into them quickly, effectively, and cost effectively even. And, with the UK now, I think that, there's never been a better time. And I've said it again, but I'm going to say it with Brexit happening, that there's a warm embrace of companies coming in, global companies or companies from outside the UK, Europe, coming into the UK in regards to visas, investment programs, taxation, is very competitive here now. And also the London especially is an international city. So coming into London, can you access US customers? Can you access Canadian customers? The answer is definitely yes. All the players that you would expect are here. And if they're not, they're doing, constant road shows here. Australia, New Zealand, so the Oceania region, you can definitely access very, very easily. So I think that's the landing zone you want, where actually if you go into hitting the US, you're focusing totally on the US. And the US is, 52 different countries in a lot of ways, legally, and, even a little bit, there are nuances around culturally.
Yes.
I think if you come into the UK, is that culturally, historically, you're going to find it an easier time to come in and learn what you're doing. There's going to be a process. If you're a company that's coming for the first time expanding out of India, you need an ecosystem where you can make mistakes, and actually not going to be, you're not going to end up at the end of a lawsuit over it. The US is big and it's great and I love it. But if it was my business coming out of Delhi, Bangalore, etc., and I would probably reach to the UK, and I would advise my clients to reach to the UK because of the international linkages it has, decent legal system, etc.
Yeah, no, I think I would also tend to agree, because while the US is attractive, it's also, you need to have very deep pockets to, make even a small dent. And, I know of a lot of companies who've burnt a lot of money there and, haven't really made the cut. So it's a tough market. It's an attractive market, but very tough market, because you'll also find a lot of competition there. Like when I was at the HR Tech conference last year, I mean, there were about 400 plus startups in various verticals from the US alone, right? Who were showcasing, their products and services. So it's a tough market, and I think you need deep pockets, and perhaps you cut your teeth in the UK, and then you prove yourself. Then that helps you raise significant amount of capital, and then as a next phase, then you move into the North American markets. So that's sort of
The other thing as well, just on the credibility piece, which I think is absolutely key, is that there is a story to it. That it makes sense when you're telling people, okay, you expanded out of India. What did you do? Well, we went into the UK. Why did you go into the UK? Okay, well, we actually ended up in London. It's an international city. We wanted to. It made sense historically, culturally, that we went in there. Language-wise, we went in there. My view on this US is you can't get away from it. It is the global superpower. It is, as you've just said, it is rich in every sense of the word, but you get punished for mistakes there.
Yes.
And as an early stage business, learning your way outside your domestic market, you want somewhere where you can make mistakes, and I think you can learn from them and you can grow from them. And I personally believe that UK and Europe, from a regulatory point, from a legal standpoint, and actually from a credibility standpoint, people are a little bit more understanding that happens. In the US, I've got an instance at the moment I can refer to. Telecoms, based in Canada, 4 or 5 years ago, decided to expand into the US. Within 30 days, they've got lawsuits hitting their new office, patent infringements, brand infringements, and everything else. It was a complete sham. But that ended up costing that tech business north of $500,000 in legal fees to fight off. So it's things like that. As you say, it's competitive, it's mature, and it's aggressive. The American market, by definition, you've got to play strong if you're going to go in there.
Right. Okay. So moving on further, Chris, assuming a company starts looking at the UK, so in this post-COVID era, what should really be the guidance? Should they look at perhaps setting up a partnership with someone to enter the market, or should they look at setting up a team of their own in the UK? Now, for instance, given the current scenario, I'm sure there would be a lot of talent which is available at an affordable cost as well. So, is there a sort of methodology that they should follow? Anything that you would suggest at this stage?
Yeah, listen, I think that, and as you well know, we're working with a number of Indian companies who are have had different timings, different journeys into the UK. And one particular at the moment is, trying to bring in, I think partnerships are the way to go in that early stage of trying to navigate the landscape. One thing that I think is very, very certain is to try and set up and trying to turn, prospective clients, customers into full paying customers. You need to have, it's far easier to do that with a corporate structure in the UK, so you can have banking, and actually most UK companies, European companies, will not take the counterparty risk.
Yes.
To go to basically that their counterparty is an Indian co. So you have what I would suggest is that you come in, you set up an effective corporate structure, which is not a lot of money, and then start to build it from there with partnerships with a UK company. And I think that the embrace you will get when you're talking to your clients, customers, will be far stronger than if you turn up with, as an Indian company trying to face those people. But does it happen? Of course it does. I'm just talking at that SME level. The experience and what I've seen is that it's far easier, far quicker, far more effective if you do that with a UK European structure than if you're trying to do it sort of interfacing from India directly. So do you need to put people on the ground? The answer, in my view, is definitely. Do you need to put local infrastructure in place? The answer is definitely again.
Right. Okay. So now we did touch upon capital raising earlier in our discussion, but so my question to you is that, I mean, should a company take a very ambitious view on raising capital, and is that something which is practically executable on the ground, or should they take a more conservative view? Because, for instance, one hears that if you go to the US now, people even talk of a seed round, which is 5 million plus, The other day I was reading an article where the founder said that I have raised $50 million as a seed round, in the US. So should one take, and also given the fact that the cost structures are much higher operating in the Western markets, so should should if the company has great IP, has a great differentiator, has something disruptive, and they truly feel that they could make a mark in that market, then should they take a more grandiose view of raising money, and is that practical, and is it also feasible to execute it on the ground?
Listen, even since, if I look over the last 5 years, has as you quite rightly say, that the floor that most investors will look at now has definitely gone up. The base figure that most people talk about now is £5 million, $5 million, but the 5 million is definitely, for ambitious businesses which have a story, which have IP. That is usually where most people are aiming at. And the reason for that, as you quite rightly say, is that there's two sides to that coin. One is that most investors who you want to partner with and be involved with, it's very difficult for them with their machinery and their infrastructure to be able to invest sub 5 million, because the cost of transaction, everything else, it just makes it prohibitive. Number one. I think number two, if you're looking at it, their reason is, well, if you're that confident about your story, your business, the ambition must be to, everybody wants to be involved in the next Facebook, Tesla, so the investors are no different in that. So they're saying, well, you know what, if I put $1 million into you, you're going to get me to this point. Actually, what happens if I put 5 million in? Where do we get to? And I think that's always which comes right back to your planning, your financial model, those core fundamentals, which are absolutely key to either, to operating a business, investing in a business, or growing a business outside India. But I think there's been some horror stories recently, about disruptive businesses, tech businesses. So I think investors are doubling down on the core fundamentals now. I think profit and loss, cash flow, all of those things, valuation, they're taking a far more pragmatic, realistic view of valuations. Right. But you are right. If you're going to come into the UK, and the US definitely, are those big checks available at seed? Yes, they definitely are. And people are achieving them, as you say they are. I would always say that I think that you've got to sometimes balance out, because on a seed round of, it all depends on valuation, but a seed round of 5 million, I'd always look at what that looks on a equity dilutionary basis. Right. The other thing we start to look at now, and I think this is important, that equity, is still much harder to access. It's slower. Some of the debt instruments that are available now, so non-dilutionary, most of them. Number two is that there's a far wider pool of debt instruments available. So we sometimes say, listen, I think that there is a conveyor belt of how entrepreneurs, founders are looking at this now, saying, well, I get my business together. Yeah. I get some friends and family. I then go on to see a venture capitalist. I then go here. We're not from that. We don't think that way. We look at the business and say, okay, what are the ambitions here? What are the objectives from the founder, from the early stage investors, right, and what's best for the business? And sometimes that is debt, but sometimes that is equity. But right, and those checks, it doesn't surprise me. From what you've read, I hear those stories every day. Right. But it is becoming a much, I would say, challenging. I think the investors are more cautious about how they're investing, what they're investing, and the size they're investing. So
yeah. So thanks, Chris. So just moving on to the final question. This is one of the topic close to my heart as well, which is really talking about accelerators. And now and typically what I have seen around is that a lot of accelerators are good at providing infrastructure, real estate, and some of these things are not really relevant in today's time and age because of work from home. That phenomenon now becoming more and more of a reality, and to some extent they're able to help with certain other areas. And very often the companies which are successful and which come out of these accelerators are successful because there is a disruptive proposition. The founders, have got it right, and so on. So have we sort of over romanticized the concept of an accelerator, or is it that there are certain markets like in the UK or in the US or in Europe where there are really accelerators who will help you end to end, and really beyond doing the product market fitment, they also are able to create those pilots for you and also help you in not just building a go-to-market strategy, but also in the execution, because a lot of companies actually need help in execution. It's not just the planning and the strategy, but execution is really the key, and rapid execution. So how do you see that emerging in this world of accelerators?
I need to be very candid with you here. We were actually talking about a European accelerator, which has a great reputation recently. And after coming off a call with one of the companies that's actually currently going through that program, I think there are a handful of global accelerators that are amazing. Most of those are in the United States. Right. I think there's a couple in the UK that I would probably say, suggest or recommend. Outside that, I think they're not very good. And as you rightly say, that what they think is that, we put a WeWork together, so it's a co-working space. I give them some early stage capital up to 50,000, and I take 5% of their company, and then I give them a program that they need to work through to go through the accelerator. In my view, when I'm looking at it, and obviously everybody has a different view on this, I think accelerators, the good ones, are much more over the shoulder. And what I mean by that is they're coaching. Yes. And they should be coaching. Nobody's interested in the office space. Nobody's interested in, this is a lovely format of how you should go through the accelerator. No, what you need, you're right, is that you want execution. So basically a race to get your first bit of revenue. Because once you break that revenue, whatever it looks like, you've broken through that minute mile, so to speak. And that is really what I think the main aim of accelerators should be, is defining who your customer is, where they are, how you're going to pitch to them, okay, and one of the big things I think also a lot of people is pricing. I think a lot of tech companies I see where they struggle, and SaaS especially, is how to price it to that customer, to that market, to that category. And I think a good accelerator is someone that guides them through those very, very key, and I mean guides them. I don't mean just sort of puts a piece of paper and remotely does it. I mean over the shoulder. Yes. What are we doing here? Let's murder room this, battle plan this, and get them to that, and bring them customers. I think is probably the ones that I see are the best ones. Partners, customers, let's get you to revenue. And I think once people have that confidence that they can go out, they can pitch, win a customer, and that customer pays them, I think that's the acceleration piece.
Yeah. So thanks so much, Chris. I think, we've had a great conversation, and I think there's a great opportunity to build a corridor with the UK and further on with the US, as your background suggests, the Golden Gate Bridge. So we connect to the US as well.
Certainly. I was trying to get a London one today. I couldn't find one. It's raining here today. It's in July and we're raining still. So I couldn't find one. But thank you very much for your time.
And I think we've been able to, through this conversation, hopefully provide, some form of a blueprint for our viewers. And, that really should encourage and perhaps, make people think about, what would be their global expansion strategy. So thanks again, Chris. And
thank you very much.
And thanks to our viewers. And we look forward to having you with us for our next episode of Future of Sales. Yeah. Thank you so much.
Thank you very much. And I wish your audience the very, very best of luck.
Yeah. Thank you.